Billionaires are battling gamers and redditors over GameStop stock, and it's turning out to be the craziest story this year. So I'll go over a couple of tweets first and an article, and then we'll come back to discuss. But I think this tweet here sums it up really well. Mike Masnick writes, new Mets owner Steve Cohen had to bail out Melvin Capital because a bunch of stock trading kids on Reddit massively pumped up GameStop, putting Melvin's $13 billion at risk of disappearing. If that ever leads to Mets cutting payroll, it would be the most Mets story ever. Now, I'm not going to read the whole tweet out, but essentially this tweet from Mrs. McG sums up the situation pretty nicely in layman's terms, and it talks about how the GameStop and Wallstreetbets short sale personally impacts the Mets team owner, and you can check that out for yourself, but we'll discuss this after the Motley full article, which I'm about to talk about now. Now, this Motley Fool article says, here's why GameStop stock soared today and then surged even higher in after-hours trading. And so it says here, so what, GameStop's shares are now up more than 1,000% since the beginning of the year. Analysts say the stock's staggering ascent is due largely to a short squeeze driven by a slew of individual investors who are coordinating their buying efforts on sites such as Reddit and Twitter. And GameStop's gains appear to have been accelerated after noted venture capitalist Chamath Palihapitiya announced on Twitter that he bought call options on its stock. Palihapitiya is essentially betting that GameStop's stock will continue to rise. Now, there's a good summary here from Reddit of what's actually happening to Melvin, and it says here, Melvin is down another 25% on GameStop stock, and it says here, these guys are so effed. Check out my math. As of January 2021, as of January 2021, they were down 30%. They had 13.1 billion AUMs as of March 2020. Assuming this doesn't change, that's a loss of $3.9 billion as of January 22. During this time, GameStop increased $46.95 from $17.09 to $64.85, aka for every $11.95 increase in GameStop price, Melvin loses $1 billion. GameStop price, as I'm writing this, is $103.46. That means since the $2.75 billion bailout that it got from the Mets owner, Melvin has lost another $3.2 billion or 25%. So it says basically, keep the pressure going, we are doing this. So there's a whole lot more to that story from William LeGate, and he's been following the GameStop story, so I'll leave a link in the description below for you to go and check out. But let me tell the story from the start, and I'll try to be brief and so you can follow along. So essentially around the 8th of January, GameStop stock was around $20, and you had these hedge fund groups that looked around for these companies that were going to be good candidates for shorting a stock. And obviously when you're shorting a stock, you want the price of that stock to fall. And GameStop, they were thinking that in a pandemic, maybe these GameStop wouldn't be doing so well. People were buying games from home anyway because of digital delivery. So they thought GameStop would be a good stock for the price to go down. And these hedge fund groups obviously decided to short the stock. So gamers and Redditors obviously caught wind of this, and they decided to fight back because they obviously felt like they were targeted by these billionaires. So they decided to put their money and try to drive the price back up, hopefully to get rid of these billionaires shorting the GameStop stock. So there was a bit of a fight, a bit of a tug of war between these billionaires and these gamers and Redditors. And it seems like at the moment, there's no stopping these Redditors because there's just an army of them right now. And if you look at this tweet from William LeGate, he says that if GameStop goes up another 17% from $149, this hedge fund will instantly collapse. That's $13.1 billion gone. So obviously it was $147 yesterday. And in pre-market trading today, it's $298. So it's up 100% already in pre-market. Now, obviously, it's not going to stay there, but who knows how high this is going to keep going, because this Melvin hedge fund group is definitely on borrowed time if the price continues to stay up at around this level. Now, obviously, that doesn't mean all gamers are winning, because at some point with stocks anyway, there are always winners and there are always losers. So my advice is like, if you already made a little bit of money from this, it's probably a good time to get out and take some profits, because this seems like it's a huge pump and dump. And so if you have a bought in at like $150, $200, then you probably should take care of what's going on so that you don't lose your money. So I don't think the billionaires and hedge fund groups are going to win out on this one, because the story has gone mainstream now, and there's just too many gamers and redditors out there who probably don't want to lose to these billionaires, just from a gaming perspective, just from doesn't matter about the money at all. They're happy to lose the money, but they don't want these billionaires to win. So I think when it comes to that level, I think the billionaires should probably just sit this one out when they can. But I'm not going to give them advice because I don't need to. I'm rooting for the gamers and redditors. So hopefully we'll see not too many people, retail investors, lose their money on this, and hopefully everyone gets out with a little bit of money. So anyways, that's going to be it for me for this one. If you like this video, make sure to click the like button and also to subscribe to this channel for more videos like this, and I'll see you in the next one.